Well, I think it's a little bit of a backfill now. We're only about 2% from that 1,600. That's a target we put out there right after the elections when we hit about 1,360 on the S&P. We felt as though, very frankly, on a math basis, you put 15 times earnings on 108 in profits, you get to 1,600. There's no other complications in that. What takes us above 1,600 through the rest of the year is a transfer from the defensives into more cyclical growth areas, and it's the great catch-up. It's not necessarily all these assets moving from bonds that everyone talks about, which is a part of it, into companies or into stocks. It's more about confirmation that the earnings are filtering in on the back of the leading indicators we're seeing around the world, particularly in manufacturing.
What do you think about the concern that something like the sequester socks consumer confidence, brings down consumer spending? We start seeing more job cuts because of that, or at least hours pulled back. I mean, just a slowing of the economy. We got 0.4% GDP growth in the fourth quarter. That's not, even though better than expected, it's not really reassuring, is it?
There's a few things that will likely trump that factor. The first one is the fact that housing is repairing. It's not going to get back to what we all remember, early times, 2003, 4, and 5. But certainly demographics are driving the replacement cycle. First, it's rental yields above home ownership all-in cost. Now that's starting to unwind. It's demographics. That leads to jobs. Auto sales are almost back to record levels. That leads to jobs. Manufacturing starts to come in. We call something called manufacturing insourcing. That's a little longer in the tooth. That takes a while. And then you start to think about what's happening in consumer spending. The boomers, everyone says they're about to retire and they're going to pull back their spending. Actually, our view is, as they go into that second life cycle, their spending is going to be higher than the people that are replacing them because of the age gap and the wealth that the boomers have been able to create. So all of this, put it all together, actually begets a better consumer spending pattern than anyone.
So the demographics aren't concerning you. In fact, you're pretty optimistic about them.
That's right. Yep.
Why do you think that? Why would baby boomers be spending more in retirement? Haven't they gotten hit hard in the recent market drop and
I'd also argue
lost
that
confidence,
demographics
not come back to stocks?
Against this nation, sort of in terms of our
They're
overall
in bonds,
fiscal health.
They're not getting any returns.
Entitlement programs that we can't afford. I mean, demographics actually